The Jackson Hole rally has come to an end as crypto is giving back all of its weekend gains. We'll be discussing that, the latest going on in equities, maybe an update from Japan, and much more today on Money Never Sleeps. Thanks for joining us today, folks. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing Kevin or I say is financial advice, so please do your own research for making any buys or sells. Kev, the excitement from Jerome Powell's speech on Friday abruptly has come to an end. We are seeing equities pulling back a little bit. A lot of the damage is in crypto. Bonds are catching a bid here as we are seeing movement in some of the yields. A lot going on. It feels like, as summer is winding down, is the bullishness coming to an end and are bears getting back in control?
It's so Jover. It's wild to be looking at this market. It really did blow its load at Jackson Hole. And, I said it'd be a week. You get a week of bullishness, and then first week of September, you put the high in. I'm going to still go along with that just because I think that was a pretty safe, conservative estimate of what I expect in the market. But you're seeing a lot of things that are problematic, like the reverse repo being tapped halfway through the day as opposed to early in the morning. It means that there's probably issues where people need liquidity. You're seeing the same kind of move in the bonds. We're seeing it in international bonds. We're seeing it in international currency. There's a lot of stuff that's not looking great. It's not great. I haven't said that in a while, but it really isn't. And we're going to continue to see both absolute stupid euphoria because, again, I think this administration is going to try and pump the bags on a lot of things. They're talking about taking stake in other companies after taking a 10% stake in Intel. There's just a lot of stuff under the surface that it's just been shoveled, packed down tight for so long that one little blip could honestly rip the bag open and the shit could just pour everywhere. It's kind of where we are right now.
The shit is just dumping out. We had some really nice runs over the weekend. We saw ETH cross 4,900, get all the way up to 4,952, and now it is back down. Huh?
You're right about that $5,000 limit. It just psychs people out. It's too hard to get there.
Yeah, it's a big psychological barrier right now that it's going to have to maybe retest eventually. But, we had that. We had Bitcoin, got back to 117. Not bad on Friday. And then it's just been 3 straight days going down. We had that huge sell yesterday that really, really dinged the price. We're seeing alts bleed. Sol went to 208. Actually, no, it went higher. It went all the way to 213. Now it's back to 195. So it is just red across the board here. Bitcoin dominance ticking up a little bit. I mean, if alt season is over, then it was a pretty shitty alt season. I mean, not if you took some profit near the top there, I guess it wasn't, but
it wasn't really an alt season, man. That was like fucking.
I mean, you got a new ETH all-time high. Sol didn't really come close to a new all-time high. So maybe you could argue that alt season isn't over quite yet. But we have inflation data coming out later this week. We have GDP data. There's really not a whole lot between now and then to get excited about. A few Fed presidents speaking today. But it's going to be, sorry, what was that?
NVIDIA earnings.
NVIDIA earnings are what the market's going to be watching. It's on Wednesday, I believe.
Yeah.
And then, Friday is a big day with PCE, personal income, personal spending. That is going to potentially move the market. Like we're at this point where now it feels like we're playing a game of chicken with the interest rates and what's going to move the probabilities. And does the sell-off happen like in past cycles, like after the Fed begins to cut? Are people getting ahead of that now? And this is where you have to, if you're really active in the markets, it's super challenging because the markets evolve. Like expecting everything to happen just like previous cycles, especially as it's easier to get information. Like some of the stuff that only really sharp investors knew in the past can be uncovered a lot easier with AI, ChatGPT, stuff like that. So it makes the game ever. That's what's fun about this is like it's an ever evolving chess match. You and the other market participants. And if you're just a small fish in this big pond like you and me, we don't impact anything at all. We're at the mercy of the markets, and so it's just a matter of positioning ourselves to not get crushed and to have upside potential for the long run.
And if there's no other way to change the name of the game, just throw fraud at it. Just keep throwing fraud at it, and in some way, I'm sure that retail will continue to lose. Yeah, let's jump into it because there's not really too much to talk about today. I just want to look at a few things that are going out there. So we have move in the S&P. Obviously, it's a bounce. It's a pretty good green candle that we got on Friday. But now you kind of flat up here. I'm not saying that this is a resistance up here. I think it's possible we can go a little bit higher. Like I said, I gave that 6,600 target. It's just you're getting into an illiquid market, and you can really see it in terms of MACD volumes, right? Back and forth, back and forth, back and forth. Price pushing higher. Bit of bearish divergence there. You can see the volume is also rolling off there. Let's look at the Bollinger Bands real quick. You can see that these are pretty wide. I would anticipate before you get a nasty move to the downside, these would start to curl in. So we're going to keep watching that over the next few days to weeks, because if there is a big move coming, you might see these kind of curl in a little bit. Take those off. Let's look at the 50 to 200. 50's down here at 62.66. The 200 is down here at 59.29. Why is this important? Those are going to probably be your big levels of support, right? If there is a really strong move, it's going to be to one of those. Now, if we look at this, we said that we need to see like about a 7% move to the downside for things to get worse after the September OPEX. Down to the red line, the 50 moving average, that's about 3%. Down to the yellow, it's about 8%. So somewhere within there is a gap actually right here at about 6,028 to 6,060. Wouldn't be surprised if we get there before the September OPEX. So let's actually draw a rectangle there, because that is possibly where we could be heading first if the market decides to pull back, because right now it doesn't feel like there's a lot of strength to the upside. It could definitely go up there because, again, the liquid markets tend to do that. The problem is you're not seeing the strength in the volumes coming in here to support that. So that's something we're going to watch on the S&P. And what's happening here with pretty much the price staying flat all day, we're down 0.22%, is that you're looking at the VIX and you're seeing, where the hell is my VIX? There it is. You're seeing kind of this flat sideways continuation, right? You're still within this pattern in this yellow triangle. It's descending. You still got some time before it breaks out, right? September 5th is when it technically is supposed to break out, and it doesn't have to pump the day after, but it definitely could start to rally from there. And that's something we're going to keep an eye on. It's happened in the past whenever we look at these VIX patterns. This one's a little bit different than prior ones. Prior ones kind of lined up for some type of key event that's happened in the markets, and then it's broken out. We don't necessarily know what the vol event could possibly be coming into September. There's a lot of stuff being rumored out there that, we heard stuff about martial law, National Guard coming in. That's occasionally stuff that, you're kind of interested in. I've heard stuff happening in the Middle East that could potentially increase in September, October. Apparently there's attacks or something like that in Iran, or there's a plan. There's narratives that you could pick all around. I'm going to go out on a limb and say it's a financial vol event. That's a little bit more in line with what I believe. And if we look over at what's happening with the Japanese markets, we're going to look at the 30-year. You broke out, and you're actually trading above this yellow. So this means that we're most likely going to see a continuation of the yen 30-year. Not the yen, the Japanese 30-year bond continuing to go up. Again, the long end of the curve for the Japanese bond market is terrible for the banks. The higher it goes, the worse it gets. Tonight is another Tuesday. We've seen that Tuesdays have been significant for interventions by the BOJ. They've had 29 so far since the end of July. 29 interventions since then. They continue to intervene. That's probably a sign that something really bad is happening in one of these Japanese banks. Let me see if I can pull up the Japanese bank chart right now. I think it's called Topics. Yes, Topics Index. Yeah, this is actually kind of wild. It's pretty much the same as the Nikkei. And see how it's shooting up as much as that. Pull up the Bollinger Bands. If these start to curl over, again, I think you're going to see a violent move. So if the 30-year continues to rise, I think this Bollinger Band on the topics, which is pretty much where a lot of the Japanese banks are in, it's a major index, you're going to see that kind of curl in, and then you could see some type of strong volatile move probably after month's end, because again, we're how many more trading days do we have in the month? 4 trading days, and then we have a holiday weekend. Usually stuff is going to try and push to that holiday weekend, so nothing bad necessarily happens. But this 30-year, it's broken out. I honestly believe it's going to go a lot higher before you get a sharp correction to the downside. Again, to do that, you'd have to crash the indexes, and by that happening, you would see that money flow out of the indexes and into something safer, like a yield, more so on the shorter end of the curve, and then the longer end of the curve you would see go down over a period of time. So that's kind of what's happening in Japan right now. It's an absolute clusterfuck. You're also seeing very similar things happening in the UK. So I think, I said before it was Switzerland and Japan. It could honestly be Switzerland and Japan, or it could be Japan in the UK, because their yields and their currency, what do they even have? The pound, or is it the sterling? I'm not sure necessarily. But it's also getting stronger as the market is getting stronger as well. Doesn't make a lot of sense there. So we're going to keep an eye on that, because once again, I think it's a financial evolvement that is coming. Does that mean that something breaks significantly? I don't know. The last time, what was it? I think I sent it to you in house back in 2008 in August. The Fed cut, Bernanke cut, and a month later, Lehman Brothers happened. And, we kind of have this expectations of there being a cut. There's a lot of problems in the financial system with these bond yields, currencies, liquidity, debt coming due after the 5-year COVID loans. It's all kind of adding up to, this is why we're not seeing the market move. Maybe that's why we're not seeing crypto move as well.
Yeah, the whole situation with the government taking more interest in privately owned companies is
sounds like a bailout.
What is it a bailout? I don't even know. It's just seems very unprecedented.
Intel could be eating shit. Let's look at Intel for a second. I haven't even paid attention to Intel, to be honest. INTC, right? Yeah. Let's get rid of the Bollinger Bands. Well, there's definitely a big move coming here, and those are going to coil around. They're hitting the top of that Bollinger Band there. And again, the Bollinger Bands are really good at telling when you're going to get a breakout, either to the upside or the downside, which we'll also look at a few stocks that I'm actually invested in right now. And I think there is potential for a move. This is a pretty man, we did look at Intel a long time ago. Damn. It's 5 waves down. He really did. So I don't think Intel's in too much danger. Maybe that's dangerous, me saying that. That's like the kiss of death. But, we were talking about it from at some point in, I think, this rally in 2023, because it was just going nonstop to the upside. And since that corrective wave, it's been 5 waves down. Now you're kind of consolidating. If you aren't able to put in a higher leg up, the trend is your friend, and it's going to continue to the downside. So I don't know if it's necessarily something that the government is doing to protect a company, or if they see it as a good investment, very similar to how Warren Buffett saw UNH as a very good investment because it was down so bad. Let's look at some Bollinger Bands on stocks that I like. I got to bring up the big boy right here, which is GameStop. There we go. Yeah, GameStop, you can see that it's trading in this pattern right here. You have earnings in 9 days. Again, with how bad liquidity is in the system, it is really a game of, are they going to issue convertible bond notes? They might. We really have to be open to that. I'm open to that. I probably will have some stop losses put in play around earnings time, because if I could catch that 20% dip from what we've seen in the past 2 times that they've issued convertible bonds, could pick up 200 free shares for the same amount of value that I currently have right now. So that's kind of a play that you continue to see. The question is, do they issue it? If they do, then you're probably going to see Bitcoin. You're going to see GME pull back a good amount. You're probably going to see it close below $20 or so. But again, that's dangerous for the hedge funds, as much as they kind of like the fact that the price is going down. Because as we've seen in the past, Roaring Kitty has built his positions around certain levels. And with these convertible bond issuances, there's a good chance that he's been building positions nonstop, right? We don't necessarily know what his position is. If that's the case, it's just giving both GameStop more fuel, more cash to throw at, a potential buyback. And you're also seeing this guy just getting lower price to enter his position because GameStop, regardless of whatever you say, this thing's at 22.78. It needs to be at $1 for the hedge funds to be break even. Like, even if it goes down a little bit, they're still fucking losing. And just think about how long they've had to keep their positions open since 2020. Right? There's a lot of things there that are just drawing money from them. But if it goes down a little bit, I see it as an opportunity. I'm sure Ryan Cohen and Roaring Kitty, I keep saying Roaring Kitty, Keith Gill see this as an opportunity. And that's most likely what's going to be of that, in my opinion, because again, Japan is part of the problem. We know that Japan does play a huge part in this GameStop saga, the requel, whatever you'd like to call it. But you can see that the daily Bollinger Bands are very compressed. You're going to see a move at some point. It looks like it's going to be around earnings. And people are probably expecting that to be moved to the downside. I think that's more in line with what I'm seeing if Japan doesn't have any issues before then. If Japan does have some issues before then, I don't think he's going to issue a convertible bond sale. I think what we're probably going to see is they're going to hold on to that cash. You're going to see the price maybe dip a little bit, but you're probably going to see a squeeze to the upside because then we know, okay, the yen is getting stronger. Positions have to be closed. People are losing money. There's going to be a fire sale. That's the case. Less fuel to short certain stocks, and GameStop's $10 billion or so of cash on hand. They could be, twapping like crazy and bringing that price higher and higher, forcing more positions to close. We've also seen huge institutional investments on GameStop. So that's something we have to keep an eye on. Another stock very similar to GameStop that's showing, the Bollinger Bands tightening, FFAI. Had a really good run recently, went to 360. It's been kind of shitty since around the Jackson Hole week. It's trading within this triangle. This is technically a bullish pattern. It could break to the upside. Again, patterns don't necessarily mean anything. We've seen Fartcoin, one of the best patterns in the world, underperform. But you can see that this is oversold on the daily. The MACD volumes are so pretty red there. It looks like they should be rolling over. If this can hold support within this yellow triangle, it probably could break to the upside. And again, this would be more in line with GameStop moving to the upside because we've thought that this is part of that basket of stocks that squeeze the hedge against GameStop. So that's one that we keep an eye on. GNS, another short squeeze stock. I'm an investor of GNS. The only thing I don't like about it is the fact that Michael Saylor is going to be a partner with them. That's not necessarily a good look in my opinion as an investor. I think you want to steer clear away from him, but this is a stock that has a market cap of 84 million right now. You can see that it's coiling up. They have a lawsuit that they're likely to file within the next 4 days. I thought that this has always been a good play. I bought around $1 or so. My average, I think, is like 103. If it goes up from here, then, we're probably going to squeeze a little bit. But this is another one that's heavily shorted, heavy short interest on it. These are all the plays that I see being somewhat possible for really good price discovery if we get into that low liquidity environment that we have been seeing signs of. So outside of that, that's all I have on the Bollinger Bands and squeeze stocks. I think those are very fun to keep an eye on. Where should we head next? We can kind of wrap it up from there too.
I think we should look at Bitcoin and ETH and just kind of be done from there. We just saw Bitcoin go back below 112. It's looking like it wants it. If it loses that, if we lose 110, maybe we go below 100 soon. Like, I don't even know. It looks ugly out there.
For sure. I just want to do one little quick thing with NVIDIA. I almost forgot. NVIDIA, apparently with earnings coming up, this is going to be either a squeeze to the upside or a pump to the downside. It really is a systemic risk here. I think NVIDIA is as much as MicroStrategy is. You can see that it's really coiling up there too. It's going to make a move. My guess, it's going to squeeze higher. Why? That's just how things are. You saw Bloomberg is actually in a little bit of a legal battle right now with some YouTuber that put out a 3-hour documentary about the AI chip sales on the black market to China through Singapore. NVIDIA was one of them. The price continues to push up higher. A lot of insider sales. You're also seeing kind of the narrative on semiconductors and AI kind of flip. You're seeing people think that this is the end, even though NVIDIA is pushing higher. What I think with NVIDIA, all you need is Jim Cramer's kiss of approval, and then you can probably see this thing turn around. I'm not even joking, guys. I'm fucking serious when I talk about that. I think that's what's going to happen. Outside of that, let's go over to Bitcoin, another systemic risk, in my opinion. You can see that you were in this pattern, you broke out of it, you went to retest it, and you lost it. Um, I honestly, my personal opinion, where Bitcoin will probably be in the near future is somewhere around 97, 98K. I think right around here is a good level. Let's see if I can mark this down. This is where we'll probably see it hit at some point if there is a bit of a market pullback. It's just because it's really hard to push up from here, right? You lost this once. I mean, you'd have to push up higher in order to get back into this channel, and you would be expecting and demanding a lot of liquidity. Now, don't get me wrong, if Tether prints $5 billion or something like that, yeah, I definitely think that could happen. It would be one order, just push it to the upside. But you are seeing people with large amounts of Bitcoin actually selling. We saw a lot of that this weekend. Dropped what $3,000 in a matter of 10 minutes because there was one sale of 4,000 Bitcoin. It's a big move for what is technically not that much supply, in my opinion. Sure, it is in one order, but think about how much MicroStrategy has. That's why it's a systemic risk, because if it does start getting really low, some of those margins start calling, you're going to be in a world of pain, I think, in that scenario. So best case scenario, you retest this at 120 and you reclaim it. You just traded within this a little bit higher. If you're not able to reclaim it, then you're probably coming down to that that 98, 97K level. So that's what I see with Bitcoin. You can see that the dominance was actually going very close to the level that we talked about last week, 57.19. It's kind of bouncing from here. Maybe there is another push to the downside. Maybe alts do have a chance to lighten up, but you got to get lower. You got to get Bitcoin dominance lower if you want to believe in an alt run. ETH all-time high, rejected. This is very similar to Wyckoff distribution. Your thrust, up thrust, up thrust after distribution, and then you'd have your legs down, taking you to the local bottom. But this whole thing, this is just pure distribution. It's going to be funny to see this in hindsight that 5K was unable to be broken. We just got enough for this to be the all-time high, get everyone feeling euphoric, and then it's just kind of this bleed out of the market for ETH. And a lot of people thinking, myself included, that ETH going to all-time highs would allow the market to open up, and we did see that with Bitcoin dominance pulling back. For alts to rally, you're not necessarily seeing that strength. That's the problem. And the fact that you're not seeing that strength doesn't mean that it's impossible. It just means that it's a lot harder now to get, that market, to get some cash flowing in the alt market. Let me just pull this here. This is going to be one to watch too. Where would ETH technically find support? Probably around 43.78. If it doesn't find support on this line, it's very similar to Bitcoin. Here's the top. Here's the support line. You probably start rolling. So that's kind of what I'm looking at ETH. Is there anything you're looking at specifically in the crypto market?
Not really, man. Like I'm it's entering do less time for me here. Like I don't have a ton of, I don't feel like I have a good read on the market right now at all. And I don't know what to trust with some of these numbers. So it's time for me to, just hodl my long-term positions, ride out the volatility, and just kind of see where things go over the coming months.
I honestly, it's not a bad, there's always time to make money in the markets. I think that's something that people always forget. We're very hesitant. I mean, not hesitant. We anticipate to make a lot of money real quick in this market. It's not the way it is. I think that's a bit of being spoiled. And sometimes doing less is honestly the best way towards wealth preservation. Because when you have cash and other people don't, they have to sell and you can buy really cheap. That's something that's a great strategy about having cash on hand. We've talked about that for so long. I do want to talk about Farcoin here because that's kind of the situation why I sold. I'd rather have cash than I have this asset because I don't necessarily believe in it sometimes. And this diamond pattern, I mean, it just got invalidated for the second time. And it just doesn't give me the hope that we're going to push up a lot higher in Farcoin. I'm not trying to be a Farcoin hater now because I sold at fucking the low, literally the local low on Jackson Hole. But it stresses me out to watch all these charts. I didn't want to watch another chart, so I sold. I mean, I haven't even bought into UVix or Quantum Biopharma, two things I said I would buy into, because I genuinely don't have a good read on the market necessarily right now, even though things are pointing at what I believe is going to happen. But this isn't a good sign. This is a parallel channel, this handle. And if you're unable to start pushing above, 126, you're not going to clearly not going to get to 170. I mean, that's just basic logic, right? Can't get higher than 126. You're not going to 170. But you can't even touch 126. Bottom of this trend line where we're currently at 83, it's a good chance you could lose that. How low could it go? I don't know. This sounds like a rap song. But looking at where we could potentially be heading if we are in that low liquidity environment, we don't get the alt season. I mean, below 74, you're done for, right? I think that's kind of the place that you should be worried about right now. I think this level right here, about 74, almost 75 cents. You start touching that, you go below it, even a wick below it, I think it's over for Farcoin. I really do. It's just we're in that environment right now. It's player versus player. You're seeing institutions dump. You're seeing a lot of money move off of low volume. That's the scary part, because the market can absolutely just swing in both directions. So I think it's a time to be very cautious, to be open to opportunities that are more in tune with where this market could be heading. But, like I said, September quarterly OPEX, it's a very dangerous place, because if it's a really bad OPEX, it means that the OPEX after going into October, we saw this in, September, October of 2022, the market bottomed within those months, but it was a terrible pull down. So just something to keep in mind.
Yeah, I think I am going to be out on Fartcoin as well. It is just, I look at this and is there upside? Sure. But, I got a second kid now. My wife and I are hoping to buy a new house next year. Like, I just can't really, I have enough risk at this moment in my portfolio that I don't need to hyper gamble here, when I could just sit on some cash for a while, maybe buy some dips, or at least earn a nice return on cash that I can put toward my future home. So I think my time in the Farcoin streets is coming to an end.
Dude, I honestly, with the recent pullback in FFAI and other things, I'm just like, do I just want to put everything in the GameStop? Is that a smart choice? And I honestly think that out of my entire portfolio, might be. I think it's better than my GNS position. I think it's better than my FFAI position. I think that it's just a safe bet against something stupid like a market drawdown. Just how I feel. Nothing makes sense here.
All right, that's going to wrap it up for today. Appreciate those of you who joined us. We'll be back later this week. We got some data coming out Thursday and Friday that we definitely want to discuss. But until then, do us a favor, hit that like button, subscribe to the channel, drop a comment. Have a great rest of your day, everybody. Stay safe out there, and we'll see you next time.
Take care, everyone.